Hi, so welcome to today's trade of the day. But before we start off with today's trade of the day, I just want to point out something. We actually had a good question from one of our community users, Surah Tula. So Surah Tula was asking how we pick the currency pairs to trade and whether what we pick is random. What I tend to do is actually to go through over 30 different currency pairs. It's not random. And then I would just briefly scan which of these 30 currency pairs actually has the nicest setup. And not just the nicest setup, but I also put things in line with like fundamentals, what's going on recently, cross assets correlation. So it's a lot of planning that goes on behind the scenes. It's not just a random currency pair because then that doesn't make any sense with doing the analysis. It's just plucking things out of thin air. All right, so appreciate your question, Suratullah, but we hope that the rest of you can continue to ask us questions and we'll do our best to answer them in each video. So today's trade of the day, we'll be looking at the dollar CAD. Okay, so why I chose today's dollar CAD is really because of the recent movement in oil and the general strength in the general weakness in the US dollar, right? So strength in oil, general weakness in US dollar. But with technical analysis, let's start off with the monthly. And as usual on the monthly, weekly, daily, what I like to do is actually look for key support and resistances, confirm them through confluences like such as Fibonacci extensions and Fibonacci retracements. Okay, so right off the bat, we see that price actually reacted, spiked here twice, right? Once in January 2016 and once as recent as March 2020. So let's call this our long-term resistance. I confirm this by using Fibonacci retracement from the swing high all the way to the swing low. Let me open up all the Fibonacci ratios. And we see that price actually spiked twice right to the 7860 area. So let's just highlight the 7860. And at the same time, we see in this place, right, in this area, that there is no nice graphical support like how we found the graphical resistance, right? So what I'm going to do is because price actually made a push up and then sort of move sideways here, I'm going to do a retracement to see how far price can go back down. Okay, so with that, let me take a retracement from the swing low here all the way to the spike up here. And once again, I open up all the Fibonacci ratios and I see that at the 50% level, price actually spiked and rejected, came back down, tested and rejected, and continue its upwards move. So we shall take this 50% level and I shall put a support line at this area. And I'll call this my long-term support. Now, with that, let's go down to the weekly. So on the weekly, while I tidy this up, give me a moment. On a weekly, we actually see that price has sort of been in a sideways movement, right, since 2015. Okay, and if price actually rejected off the top here in 2015, then we can say with greater probability that after this rejection here, we would probably see the same push downwards. All right. So what do? We can also actually confirm using Fibonacci extension. We take a zigzag from the swing high to the low and back to the top again. And we shall see that actually the long-term support falls quite closely to the 100%. Okay, so but this is just additional knowledge. But what we really want to do on the weekly is also to find long-term resistance and long-term support, or rather weekly resistance, weekly support. Now, because price is actually closer to the long-term resistance here, we do not have to search for a weekly resistance just yet. What we want to do is to see how far price can go low, so we look for a weekly support. Okay. We can look for a weekly support through two ways. We take a retracement from the swing low here all the way to the swing high here, open up all the Fibonacci ratios. Same thing, we take another retracement from the swing low here to the current swing high and open up all the Fibonacci ratios. Now, we see that the two levels that the Fibonacci retracement ratios line up very nicely would actually be this 2360 and 3820, where price is currently testing. The next level where price actually lines up, where ratios line up really nicely along with graphical, will be the 3820 and the 6180 retracement. Lines up with this graphical nicely and also this graphical nicely. So we really want to focus on this level. With that, let me just highlight the levels. And we can put in our weekly support. We got our weekly support, we got our long-term resistance. Let's go down to the daily. Let me tidy this chart up for you. Right now, we can actually ignore the long-term support because it is really far away. So let me just remove that. And what we want to do is really to focus on this area here, right? So we already said that price. Remember earlier on, I said that there was another level, the 23% and the 38% that line up really, really nicely here. So that's why we see price actually sort of doing some sort of double bottom testing this area twice. Okay, but ultimately the next level, once this level is broken, the next level that price should drop down to is this key zone here, the weekly support. So let me just highlight that with a box because this is a zone. Okay. So we see that price sort of actually made some sort of zigzag pattern. We want to see whether this is another key level. Let's just use a Fibonacci extension, swing high to this low and back up here. And we see that the 7860 falls in line with the weekly support as well. So this is definitely a very strong level. And because now we're on a daily, we can consider this weekly support as our daily support. And we want to look for daily resistance because now the long term and weekly resistance is quite far away. A retracement from the swing high to the swing low, open up all Fibonacci ratios, and we see that the 50% level seems like a nice graphical level, so we can actually put our daily resistance in. And let's just highlight the fifth. Before I remove all the other ratios, one more thing to note is the negative 27 target is actually quite close to the weekly support and the daily support. So let's just highlight the 50% level. So the bias that we have is currently we see that there's a strong some kind of support here. What we really want price to do is really make a push up to anywhere close to the daily resistance, right? And after this push up, we expect it to make a further push down to the weekly support. So let's go down to the 4 hours to look for nice opportunities. And once again, I'm going to zoom in on this area and I'm going to tidy this up. So now we really just want to focus on this area here since we're on the 4 hours now. And what I can see is after price made this push down, it's sort of making a sideways movement and it fails to break this low here, right? So I'm thinking, like I said earlier on the daily, that the bias is for price to go somewhere higher into this area before making a push down. So let's look for a nice resistance level on the 4 hour because price really made this price sort of made a push down from here. We want to see how far price can retrace upwards. So let's take a retracement from this spike here all the way down to the swing low. See that this daily resistance is near to the 7860 region. Is actually a zone. We open up all Fibonacci ratios. And currently, graphically, I can see that there's this 3820 level, right? That price spiked multiple times and failed to break through for quite some time, a few days before it finally broke through. So what I like to do is actually to keep this 3820 resistance level. One more thing to note, the target of the retracement at negative 6180 is also close to the weekly support, daily support level. Right? So I'm just going to leave these two ratios. Okay, I'm going to select the 38. So this is what I'm going to keep right there. And I'm going to say that there is a sort of a resistance on the 4 hour. All right, so let me just call this the 4 hour resistance. Another thing that is interesting to note is price has been making lower highs, right? Every time price has been making lower highs. So what does this mean? When we join the line together, careful not to cut the candle bodies, to take the wicks, that's fine. But when we join the line together, we see that price is clearly in a downtrend. All right, so for today's trade of the day, what I really would do is this 4 hour level would actually be anywhere in this zone, anywhere in this zone, right? Anywhere in this zone. Anywhere in this zone will actually be my sell, right? It will be where I'm actually selling. Okay, and if price were to break above my 4 hour, means my bearish idea is invalidated and price could very strongly and high probability push towards the daily resistance or even the long-term weekly resistance. But because now price is in a downtrend and holding below my 4 hour resistance, I would actually sell anywhere here. I can even sell now and play towards my take profit at the 136.65 level. All right. So this is really in line with if you guys were to look at the price of oil. Oil has been strengthening recently, especially overnight, and that will cause the CAD to strengthen. And if the CAD strengthens, then the US CAD would actually fall lower. Further, the US dollar doesn't seem very strong now, and it is actually quite weak. So this is the trade of the day. Thank you all for your time.